Well, the net revenue number is a little bit short of expectations. And remember, the wealth management business here at Morgan Stanley is certainly the one to watch. You also have FICC sales and trading revenue coming in higher than expected. A long trend with the rest of Wall Street here really capitalizing from the volatility you're seeing in broader fixed income currency commodity markets. Morgan Stanley has been working very hard to grow that business very meaningfully. Now, equity sales and trading comes in at $2.5 billion above expectations. This has been an extraordinary race on Wall Street that does beat expectations, but it does still come in below where Goldman had come in yesterday at $2.9 billion. That puts Goldman in the lead once again. Again, it's a softer market. However, you do see Goldman really fighting to take share among those big institutional clients by leading with their balance sheet, and where Morgan Stanley has seemed to be a little more risk-off.
What we're seeing is also that Morgan Stanley third quarter provisions for credit losses are exactly the opposite of all of the other banks. They came in bigger than expected at $134 million versus $126.2 million expected. Do we have an understanding of what's behind this, of whether they have some maybe corporate loans on their books that are souring pretty quickly?
Oh, that is certainly the case. As we know, Morgan Stanley has some very large leveraged loans on their books, including that of X, or Twitter, formerly known as Twitter. But beyond that, remember, it's still a very small number here that you're looking at for those provisions. That's not really the worrisome part here. That wealth management net revenue miss is a bigger deal, and you're seeing the market immediately start to react to it. Remember, Morgan Stanley, from a price to book perspective, was among the most expensive of banks. Most other banks are trading below their book value, even of the largest banks. JP Morgan is the only one trading at a more expensive level. But remember, JP Morgan's wealth manager really was able to rake in the money here. So what is happening among client sentiment here that is getting spooked by the market?